Cisco's new CEO, Chuck Robbins, tells me get ready for consolidation in the tech industry and how the company is positioning itself ahead of the Fed's rate decision. I'm Emily Chang, and this is Bloomberg West. Coming up, investors bet on the state of Oracle's cloud business. We've got the latest earnings. Plus, Uber CEO Travis Kalanick talks about prices and robots with Mark Benioff. And venture capital legend Bill Gurley on Amazon's challenge to Google. All of that ahead on Bloomberg West. First, to our lead. Breaking news on Oracle. The company reporting quarterly revenue that fell short of analyst estimates. Oracle was hit by a slowdown in software license sales. The company is seeing a shift to cloud products delivered over the internet, and that's hurting its traditional business. Growth also getting hit by the strong dollar. Here with me to discuss, James McQuivey of Forrester Research. So what's your big takeaway from the earnings today? Obviously, we're seeing they're not moving as fast into the cloud.
Well, someone's getting that
right,
cloud licensing
exactly.
from those companies that Oracle is not. And so it leads you to, that means they're now playing catch up in an environment that they were already late to in the first place.
So who's winning? Is it Salesforce, Workday, Amazon, Microsoft?
It's all of those people who moved first. In fact, Salesforce, with this backdrop of Salesforce going on here in San Francisco, of course, has done really well, but themselves are not moving as quickly as their customers are now ready to do. So you see someone like Amazon and Microsoft both saying, well, here's the raw capacity to go cloud. Why don't you come on in and join us, even though we haven't quite worked out all the solutions?
Where Oracle's concerned, could it be short-term pain for long-term gain? It certainly seems like they've recognized they need to move more quickly to the cloud, but they haven't been able to deliver on that yet.
If they've recognized it and they haven't been able to deliver yet, even against expectations that were already lower to begin with, what makes it certain that they will get it next time around?
Okay. So what does Oracle need to do? I mean, you know, if they haven't moved quickly, and they're a giant. They're not a company that can move as fast as some of these others that we're talking about.
Well, we're coming to the end of a calendar year. You're going to see their sales force out there being very analog, shaking hands, working with their clients, trying to say, trust us, we will nail this. We want to sign you up. Let's commit you to some long-term agreements here, during which we will put up some very specific guarantees of what we hope to deliver. So I think it's going to be really about, interestingly, not the cloud service, more about the human service in the meantime.
All right. Interesting. All right, James McQuivey, you're going to be with me throughout the show. I want to move now to Dreamforce and speaker, Cisco CEO Chuck Robbins, the new CEO. Since taking the reins from John Chambers 2 months ago, Robbins has presided over a successful financial quarter. But with the backdrop of global market volatility, he's also made it clear that there are going to be some major changes to Cisco's business model. I spoke with him earlier today, and we started by talking about his vision and Cisco's latest quarter, his first as CEO.
Well, you know, if you think about what just occurred, Emily, in Q4, we had a record quarter. And as I've said that to people, they sort of go, okay, you had a record quarter. But now I have to remind them that in the 30-year history of our company, and over the last few years when it's all been doom and gloom and everything's going to disrupt us, we actually had the biggest quarter in the history of the company. So I think, you know, our solutions are relevant to our customers. They appreciate our innovation. But if you really think about what's transpired, is we have 15 billion devices connected to the internet today. And we believe by 2020 there'll be 50 billion devices. And Salesforce this week said 75 billion, so hopefully they're right. But either way, it's a big number. And then by 2030, 500 billion devices. So when you think about this massive connectivity and the distributed nature of that, we think that's right in our wheelhouse.
It's been growing the top line in, lower single-digit percentages, and analysts say that's going to continue. What do you see? What do you think you'll deliver?
Well, I think we have the opportunity to continue to grow. I think we can grow faster, and I think that with all the connectivity that we see coming on, I think that they'll have to judge us for our results.
How much faster?
Well, we'll have to see.
So, we're talking about the global landscape. We're anticipating a decision from the Fed tomorrow about whether or not to raise rates. How is Cisco preparing for an environment in which rates may be potentially higher? Do you have ample cash? Will it affect M&A?
I think we definitely have ample cash. I think that what you're seeing right now with the markets, when things get tougher, that's actually good for us because we have great strength, we have great balance sheet strength, and typically when there are challenges, we actually gain market share. So while we don't want to see that, it tends to be good for us, and some of the valuations may become more rational as well. So,
what do you think about valuations right now?
Well, I think that the private markets have a different perspective on valuations than the public markets do, and I think that you're going to have to see some normalcy come back into that over the coming quarters.
So Cisco has historically been very acquisitive. You've used a lot of stock to buy companies. Do you see that continuing? Do you think you'll be more or less acquisitive, and in what areas?
Well, if you think about how we drive innovation today, we have almost 20,000 patents from our own R&D. We do acquisitions. We've done 180 of them. And by the way, 90% of the employees are still with us after 5 years. So that's very positive. You look at what we did with SourceFire. That's a core part of our security. The Meraki business that we bought, that was $100 million booking run rate when we bought them. And we exited Q4 at $1 billion run rate. So they've been very successful for us, and we'll continue that. And you can see us, the areas of analytics, of cloud, of security, all the areas that are important to our customers.
That's where you think you'll be more acquisitive. Now, you mentioned that tech giants, they need to adapt in this new environment. We just saw HP. They're laying off 30,000 people. So these companies are making painful choices. Microsoft's had layoffs. Cisco's had layoffs. Yes. How happy are you with the size of Cisco's current business?
Well, I think that, in the case of HP or Microsoft and others, we all have to make the tough decisions relative to our own business. What we believe is that coming off a record quarter, that the pace of change is going to require us to manage our business more effectively. So what we look at, what we're thinking about, are more portfolio decisions. What I don't want to do is put the company in a position where we forward invested too much so that we have to take a large action, and that's what we're going to try to avoid. So we're going to try to drive productivity. We're going to take advantage of the technology that we're positioning with our customers to completely digitize the company, which we think will make us more efficient, greater productivity. So we're very comfortable with that.
So do you see more layoffs in the future, or?
What we do is we look at geographies, and those that are performing well we invest in, and those that are struggling we have to adjust our expenses appropriately. We look at product lines that either aren't performing or are no longer relevant to the customers, and we have to adjust our expenses, and those will be the primary things that we'll continue to focus on.
So, Cisco, as you've mentioned, is a truly global company, lots of different geographies. What do you think about the broader market volatility that we're seeing here and in China? How concerned are you?
Well, if you look at what's going on in the emerging markets, as an example, China and Russia have largely been geopolitical issues to date, and now there's economic concerns, obviously, in China. We've got Brazil that's been a challenge, and then you have Mexico and India that have performed really well for us. And, we focus on what we can control. I know it sounds a bit like a cliche, but that's really all you can do. And then we will respond and adjust based on what's happening in the world.
One last question. Meg Whitman told me she sees a lot more consolidation in the tech industry, given what's happening more broadly. Do you see that as well?
I think there'll be significant consolidation in the tech world. I absolutely do agree with her there. I think what you're finding are that customers are looking for the business benefit of the technology. They're looking to get to the outcome faster. And so in order to do that, we have to bring these architectures to life. We have to bring the solutions to our customers in a way that work and provide benefit immediately. And so I think a lot of the smaller niche players are going to have a challenge with providing a box, because it doesn't really get them to the business outcome. So I think that and our customers' expectations and the pace of change are all going to lead to tremendous consolidation.
Cisco CEO Chuck Robbins there, who will be speaking at Dreamforce tomorrow. Now, up next, we'll hear from Uber CEO Travis Kalanick on the future of self-driving cars. A story we are watching. Lyft and Didi Kuaidi are now official partners. The deal will allow Lyft users to find rides in China and let Didi Kuaidi users find rides with Lyft drivers in the United States. The deal comes after Didi Kuaidi invested $100 million in Lyft earlier this year. It will help the Chinese service fend off Uber, which has set aside $1 billion to push into Asia. For now, Didi Kuaidi controls 80% of the ride-hailing market in China. Turning back to Dreamforce, Mark Benioff interviewed Travis Kalanick earlier today as part of the event. And over the last year, Uber has added a couple dozen scientists from Carnegie Mellon University to work on self-driving cars. Take a listen to what Kalanick, the CEO of Uber, had to say about a driverless future.
there's just an insane amount of public good that comes out of it, this kind of new technology. And that's why so many companies are working on this kind of thing. Where Uber is, you could see, well, this is a little bit disruptive to our model because, well, we have a two-sided marketplace and we sort of do pretty well as we are today. But as a technology company, you also have to say, well, am I going to be part of the future or am I going to resist it? And we don't want to be like the taxi guys that came before us, right? We're a tech company. We embrace the future. And then what you're left with is what I call optimistic leadership, which is, okay, well, there's going to be some interesting things that happen when driverless becomes a thing, when all these companies start rolling out driverless cars and this kind of thing. Is Uber in a place where we can be optimistic leaders in helping through that transition? Mm-hmm. It's not going to happen. This is not going to happen all at once, and it's not going to happen at scale. It's not going to happen anytime soon, right? But I don't know, 10, 15 years out, whatever the number is, there's going to need to be leadership in cities. There's going to need to be leadership with the companies that make this kind of technology to help with that transition. I think it's an interesting challenge, but also an interesting opportunity to lead through it.
Salesforce CEO Mark Benioff with Uber's Travis Kalanick at Dreamforce. He's back with me now, James McQuivey of Forrester Research. So what do you make of Travis's comments? It's easy to be seduced by this idea that we should embrace rather than resist the future, but driverless cars are really far off.
Actually, they're going to be here faster than I think he's even saying
really?
They will be here. Yes, because people will accept them faster, probably than governments will. So there are some barriers in the way. But the challenge that he's facing is he's barely getting his first business off the ground, and he already realizes he's ready for disruption next time around, and he's trying to say publicly, we're not going to let that happen to us. The real question is, will investors let him be the guy, the captain that steers that ship into that next wave? I'm not sure they will.
What? Wait, clarify.
Well, he seems in over his head on the
You don't think he'll remain CEO of Uber?
Not long enough to see driverless cars happen. Not if investors have their way.
Why?
Because he hasn't shown that he knows how to manage all of the complexity of government, which is going to be very important when you get into driverless cars. And at the same time, the end user, certainly, Uber users get the best experience ever. But not even the drivers are still as happy today as they were a year ago. Managing all of those needs in this game is hard enough. Take it to the driverless car level, and it multiplies.
Is he getting ahead of himself? Should he even be thinking about driverless cars?
Probably a little bit ahead of himself, but in the back room, the investors that have been coming on have been saying, we are putting this much money in you because you are going to be huge. This is going to be Uber, the literal meaning of the word Uber. So I know he's getting that message from behind. Maybe it's not the right message to be telling out to the world right now when there are still skeptical governments and drivers out there.
Do you think Travis will take him through the IPO?
I do think so. At this point, it's a little too late because he is already the figurehead. Now, he needs to learn how to change what kind of figurehead he represents.
If anything, your opinion is quite controversial. And speaking with investors, it seems to me that Travis has a huge amount of support.
Absolutely,
I don't know about, for decades.
Absolutely does for now. But when he's talking about 10, 15 years from now, that would be very surprising. If he doesn't learn how to manage all of these complex issues with so many different constituencies, 5 years from now, there will already be talk about how do we get to the next level.
All right. Well, if that happens, you said it here first, and you will get all the credit. James McQuivey of Forrester Research. Stick with me. We'll be speaking a little bit more after the next break. First, though, the Entourage star Adrian Grenier is a believer in crowdfunding. Earlier this year, he raised funds on Kickstarter for one of his films. I caught up with him at Dreamforce and asked what Hollywood can learn from the tech community.
I've always been curious about what would happen if we opened up the opportunity to have equity in long-term upside of a successful project given to the crew and people below the line. And I'm very much interested in exploring that, especially now that things are changing. Budgets are shrinking, so there's not a lot of money to go around. And, again, to reflect my social values as a way to support and enrich the everyman or the little guy, so to speak. Let's give him an opportunity to benefit when things go well.
Up next, what is Google's biggest challenge? We'll have more from my interview with venture capitalist Bill Gurley. And Google gets involved with Europe's worst refugee crisis in decades. All the details next. It is time now for the Daily Bite, one number that tells a whole lot, and today's number is $11 million. That is the amount that Google is aiming to raise in a donation matching campaign to aid the thousands of refugees flooding into Europe right now. Google is matching the first $5.5 million worth of donation made to the google.com/refugee relief. Europe is facing its worst refugee crisis since World War II, driven largely by civil war in Syria, continued violence across Afghanistan, Yemen, Iraq, and Libya. The donations go towards Doctors Without Borders, the International Rescue Committee, Save the Children, and the UN High Commissioner for Refugees. Well, speaking of Google, legendary venture capitalist Bill Gurley of Benchmark Capital talked to me about what he sees as the biggest threat to Google's search business. Take a listen.
You start your searches with Amazon with Prime checked. And then the second thing you do if that doesn't work is uncheck Prime. And then if that doesn't work, you go to Google. This is why I call it reversal of funnel. Google's gone from being the starting point to the search of last resort. And that's pretty powerful. Amazon threatens a much broader segment of Google's search traffic, which is e-commerce.
When you say search of last resort, that Google will become the search of last resort, what does that mean for Google?
What I see happening is two things. One, they've got this thing called Google Express, which I kind of view as a chaotic response to this problem, which is, okay, well, we're going to make it possible to close the loop on a Google transaction. But it's not set up in a logistically optimal way. You're, going around. And I have a hard time believing that that is in any way optimized at a level that makes economic sense.
Do you think Google is serious about delivery?
I don't know. I think it's defensive rather than offensive.
What about Instacart? Instacart is being touted as a win-win for both Instacart and for retailers, covering the last mile. For example, Target is trialing it in Minneapolis. Yeah. Does Instacart have it locked down?
Well, I'd say there's a couple of questions, about that situation that I don't know that would ferret out the answer. One of them is how many people need that amount of care, My wife's a huge fan of Instacart, and I have to constantly remind people that Webvan had remarkably high NPS scores. Like, everyone loved Webvan right until it went out of business. And if you give the consumer more value than you charge them for, they will love you too, which leads to the old saying about handing out dollars for 85 cents. You can go ad infinitum. And the thing that so one question is what percentage of the population wants that much touch? But then the second question is just core economics. And we're in a period where the chosen unicorns are being given hundreds of millions of dollars, and we don't have disclosure. And so you just have to ask yourself, how much margin is there in there? Does it have to be priced at a premium or not? The unit economics, I would think, would be very difficult.
So you think Instacart could be the next Webvan?
Who knows? I mean, that's such a loaded term because you're implying bankruptcy,
that's
basically.
That's the point.
Yeah. And so I don't know. I don't have enough knowledge. I do think that it's not a question of whether people like it. It's a question of whether you can generate enough cash flow from having that type of operation. And the barriers to entry aren't that dramatically high.
So Chris Sacca, for example, told me he didn't invest in Instacart, Postmates, Ship because he thinks that stuff Uber is going to do. Like, what do you think of that argument?
I shouldn't speak on behalf of Mr. Sacca, who speaks on behalf of himself quite well. One thing that happens in Silicon Valley when it's always been highly cyclical, and the more we get into peaky territory, the more optimistic we get about business models that are lower margin. Like, we just start, it's like the last time, all this Postmates and Ship stuff happened was 99 with, what were the name of those things? This is Cosmo, right? It's the same, like, it's the same, just with, the smartphone helps a little bit because you have more data and transparency, but we'll see. I mean, the question for all of those things have to do with economics, you know, core economics.
Bill Gurley of Benchmark Capital there. Back with me, James McQuivey of Forrester. He got a lot of flack for that "it's the same beep" comment. What do you make of what he said?
Well, he's sitting in a great position where he can act casual about all of these things that are maybe going to be the next big unicorn or maybe going to die tomorrow. But honestly, he's right about the fundamental economics. This will come down to, can you create a business that generates value that consumers will accept, for which you can then make a profit? It can't work any other way. We know this now from capitalism. The challenge that maybe he's not accounting for is that the cost to do all of those things has been falling steadily since Cosmo. He said mobile helps a little bit. Actually, mobile helps a lot. Cloud helps a lot. Analytics help a tremendous amount. Machine learning is going to help even more, so that things will be ordered for me that I didn't even realize I needed until they suddenly show up at my door.
What do you think of the fate specifically of on-demand startups like Instacart, Postmates, Ship, at the same time that Uber, the ultimate on-demand company, is seeing so much success?
Actually, the challenge with on-demand businesses is that they wait for you to realize you have a need and then make it super convenient to act on that need,
right.
Uber included.
Hey, I love Instacart.
Absolutely.
I love Ship.
The next phase, though, is when somebody does the thinking, and it'll be a computer, to realize that you need something before you even need it. That before you pull your phone out to say, I need a car, the car is pulling up. That is machine learning, that's cloud, that's analytics. Whoever nails that combination is not only going to get your $1, but probably your $2, because you'll pay a premium for that kind of service, especially as it encroaches into every part of your life.
Interesting. We'll see if Travis Kalanick is still at the helm when that happens. James McQuivey of Forrester Research. It's been great to have you here on the show. Looking forward to you speaking at Dreamforce tomorrow. Thanks so much for stopping by. That does it for this edition of Bloomberg West. Tomorrow we are going to be live from Dreamforce. We'll bring you my interview with Salesforce CEO Mark Benioff. Do not miss it.